Hi, this is Mike Maloney. I've often said that government-mandated bubbles can go a lot higher and last a lot longer than a free market bubble, but eventually all bubbles pop. But when it's a government-mandated bubble, run for the hills, dig a foxhole, duck and cover, run and hide. It's probably going nuclear when a government-mandated bubble pops. Uh, the stock markets in China are way overvalued, and they had a huge drop today, about 8.5%. Now they're about 29% down, I guess, since the peak last month, and that's nothing compared to what happened in 2007, though. Uh, this time they're dropping from 5,000 points, is what the Shanghai Composite Index was at just last month. In 2007, it had reached 6,000 points, and it eventually crashed over 70% all the way down to 1,700. This time we're coming off of 5,000 points, and right now we're down at about 3,750 points. So the crash is nowhere near what it was in 2007. But, how did their markets get so overvalued? Is because after that crash in 2007, the people became convinced that the government would come to the rescue. And it's caused these insane valuations. And so now here comes the government to the rescue again. Now, I need to tell you first that they don't do things in a covert way like we do in the United States, where the Federal Reserve creates $3.2 trillion worth of currency and then shoves it on our big banks' balance sheets, hoping that our banks will do their dirty work for them and pump the stock market up, which they did. Instead, the People's Bank of China just creates currency and buys stocks outright. They don't care if people see, if the rest of the world can see what's going on. They can see that it's not a free market and that it's a government manipulation. Now, to boost confidence, the government pledged 5 trillion yuan, that's equivalent to $800 billion, or almost 10% of their GDP, to prop up the stock market by buying stocks. And they've actively intervened more than 40 times in the past month. They also disclosed that they had an extra 600 tons of gold lying around in their reserves, which is about 57% more than they had officially reported. They've made threats to arrest people, to halt malicious sellers. They've talked about making short selling illegal. And a few weeks ago, trading was suspended on 40% of the Shanghai Composites of the Shanghai Composite Index. 40% of the companies they halted trading on. Now, during this rebound that they had over the past few weeks, they reduced that to where it's just over 10%, or 126 of the 1,114 stocks that are listed on the Shanghai Composite. Those 126 weren't even trading, and still they lost control. 2/3 of the companies listed on the exchange hit limit down, which means that trading was halted on those stocks when they fell by a certain percentage. And, their government now is caught between a rock and a hard place. The IMF wants China to end all of the market manipulations. They don't want them intervening in the markets. And because China does this, it makes their inclusion in the SDR a little bit less likely. And so China wants to end the intervention in the markets also, if they could. But the people want the government to guarantee that their stock market will always go up and that investors won't get hurt. And the people in China, I've been there. They really believe, they have faith in their government. They believe in their government. But, I've got one message for them. The bigger the bubble, the bigger the implosion. So we're going to keep an eye on this. And we'll also keep an eye on whether or not there's any contagion from this, because what I see, what I've been predicting for a long time, is a global deflation. I've been saying this time it's global. And I have been saying that we would have a deflation before big inflation or a hyperinflation. And I believe that is exactly what's playing out. You're seeing commodities fall all over the place. You're seeing currencies going crazy. You're seeing stock markets going crazy. As I said before, the crash of '08 was just a speed bump on the way to the main event. Well, this is we've been in the eye of the hurricane, and now the other half of the hurricane is coming, the other side. And this side is going to be a lot worse. Thanks again, and we'll see you next time.
All the world is trying to expand its currencies supplies right now, thinking that they can stave off deflation, and they can't. And I'll show you why. As they print currency, you can't get the public to take on more debt if they don't want it.